Hi, we're going to talk about the top 10 REITs that you might want to take a look at. Okay, so this one is an industrial REIT, and it's called Prologus, PLD, and it has industrial property space it's around 57 billion lease space, and it's a top retailer in the US, Japan, and Europe. So those of you who like to have a little bit of US, Japan, and Europe, this is what you get in Prologus. And the customers do include Amazon, BMW, and a logistics company, Nippon Express. So you might want to take a look at this. And it also is going to be acquiring LPT, Liberty Property Trust, that was a competitor. So, and they've had an average of 10% dividend growth for the last 5 years. So, but always take a look, because of the economy right now with retail and residential, we don't know what's going to happen right now because of the corona. So do your research and look at all those factors. Welltower. Some of you probably have heard of Welltower. Ticker symbol WELL. People are looking at Welltower because it's a healthcare REIT, and since right now that might be something interesting. It has high quality senior housing, nursing facilities, outpatient medical properties in low cost areas, and senior living accounts for about 15% of the net operating income. So as the aging boomers, it might be something you might want to take a look at. Okay, so that's Welltower. And let's see. This one's called, let's see. The next one that I'm going to do. Oh, yes. WP Carey. WP Carey. And the ticker symbol is WPC. W as in win, P as in Paul, and C as in cat. It's similar to Realty Income. That's another one. It owns several property types, not just retail, so that's nice. So it has retail, industrial, and warehouse, office, and some others. So that might be interesting to you to have, like, not just be stuck in retail, because we know retail right now is hurting, especially if it's a mortar and brick store. Because if you have, if you're able to do online, like Amazon, Walmart, Target, wherever you can buy online seems to be where people want to go, especially, you don't really want to go into stores too much now. So take a look at WP Carey. That people like looking at that one. Let's see what else. Realty Income. Okay, so that's the O. People know Realty Income, and it owns approximately about 6,000 properties, and everyone knows Walgreens, because where you go get your toilet paper, your Clorox, your hair dye, your makeup, your cotton balls, and your prescriptions. So it has Walgreens, it has 7-Eleven, it has FedEx. So people love that. And it is usually the top most best REITs. And people, it's a favorite of people's. And it is a monthly dividend, and it calls itself, quote unquote, the monthly dividend company. So people like that. Right now, as you know, retail is probably a little bit down, but real estate, we have to watch for those mortgages, watch out for your customer payments. Anyone has apartment buildings, if people don't have jobs. So everyone is just sitting on pins and needles right now. Okay, so this one, I'm not sure if you heard of it, Mid-America Apartment Communities. You might be even renting one of these apartments. So Mid-America Apartment Communities. If you're a renter, might want to check that out, or if you're an investor. The 5-year annual dividend growth is about 5.7%. Dividend yields 2.8%. And that is MAA, ticker symbol MAA. M is in Maryland or mighty, A is in awesome, A is in awesome. And they have their apartment communities in the Mid-Atlantic, Southeast, Southwest, and also Florida, Texas, and North Carolina. So that's one you might want to check out. Okay, let's see what else. I'm going to give you another health one because of the economy right now. Health Peak Properties, which is short for PEAK. The ticker symbol is PEAK. PEAK, and they do senior housing, medical offices, life science buildings in San Francisco, Boston, and San Diego. So you might want to take a look at that one, especially in the economy and the year that we are in with people, the aging boomers, the corona, and so that might be something you might want to take a look at. Dividend yield 4.3%, and so let's see. Duke Realty. There's Duke Energy, but this one is Duke Realty, which is DRE ticker symbol, which is D is in Dave, R is in Rich, E is in excellent, and it's in the industrial space, and market value is $12.8 billion, dividend 2.7%, and they've had a 5-year annual dividend growth of 6.7%, and we like that. They often are near transportation hubs such like airports, rail terminals, where land is expensive. So they have 500 facilities and 155 million square feet in 20 major American markets. So take a look at that if you are interested in that industrial space. And Boston properties. Those of you who live in Boston know that it's expensive there. You know, we got ticker symbol BXP. B is in boy, X is in X-ray, P is in Paul. And they are called the king of office space, and it has prime properties in New York City, Boston, Washington, D.C., San Francisco, and Los Angeles. And they own over 51 million square feet, and they have 196 properties. They have the Times Square Tower in New York City, Prudential Center in Boston, and so this one could be very, very interesting. So even though that there's over 22 million Americans unemployed, we'll see how it plays with the real estate sector. So we are all just, waiting to see what Congress does and see how we can reopen the economy and what's going on there. So please study, do your research, read your Barron's magazine, Forbes magazine, your Morning Star, and just keep up with the news. All right. So this one, I think you're going to like this one. Site centers, SITE centers. The ticker symbol is SITC. And this one, they have their customer, they are working with, you probably heard of them, but this has the TJ Maxx. The TJ Maxxes, they are in the shopping centers. It's a shopping center REIT, so where you have your grocery stores and your TJ Maxxes, and the Home Depots, Party City. So they'll have the shopping centers. People like shopping centers because they're usually triple net. But so you might think like, the shopping malls and these open air shopping centers usually are nice. People want this. They have large grocery chains. And so you might want to take a look at that to see what's going on with the shopping centers, because traditionally those are good deals, but right now we are just in a state of flux. So real estate investment trusts, because they are in the real estate sector, and the thing is that these are down now. These stocks are down right now, so you can get in there at a good time if you think they can go back up, but it's up to you. I'm going to give you a couple more for those of you who are listening, and I'm going to just read them real quick so you can hear them. Alexander Real Estate Equities, Extra Space Storage, Public Storage, SBA Communications, American Tower Corp, Digital Realty Trust, Equinix, QTS Realty Trust. So Alexander Real Estate Equities, that's the healthcare that I told you about. But right now I think everyone's down a little bit, so it's up for you to check those. So Extra Space Storage is EXTR ticker symbol, and it's a self-storage, and they have 1.3 million units and about 140 million square feet of rentable space. And recently their yield is 3.8% annually, and they're saying the company shares did dip. So you got to look to see, because of the economy right now, the economic situation on real estate. Public storage, I told you about that one. That also went down a little bit. I told you about Prologus, and they also had a little dip. SBA Communications, SBAC is the ticker symbol. It's a tower, so they are in the towers. So you might want to take a look at that one, because they, it's a different kind of REIT. So if you don't want, like, they do cell towers, so that might be more interesting to you. Well, cell towers, because, people are, maybe they're not going into the brick and mortar, but they still need their cell phone. So that's a cell tower one. There's American Tower Corp, which is AMT. A is in awesome, M is in mighty, T is in terrific. And this is, is one of the largest global REITs with around 180,000 tower sites around several countries, which is interesting. You might like US, Brazil, France, and India. And it says the company shares lost around, it dipped to about 6%. And the yield is, they have a yield that is approximately 1.9%. But remember, these dividends are not guaranteed. And if the company needs to hold back on their dividends on the economy, they could hold the dividend back. So it's not guaranteed that you get these dividends. So don't just always rely on the dividends, especially in the economy that we are in. So if you're just buying for dividends, it's not guaranteed that you get those all the time, even though they offer it. But usually the company does like to give the dividends to the shareholder, and so that is. So Digital Realty Trust, that's DLR. D is in Dave, L is in Larry, R is in Rich. It's also a data center, and they can do remote operation, and that might be interesting in case you're like, well, data, everyone needs data. That's really important, especially with cloud and home delivery and using computers and phones. We need that. So their dividend yield is 3.3%, and I think they're saying that one's doing pretty good, even though for the conditions we're in. Equinox, ticker symbol EQIX, and this is another data center REITs, and it says it had some gains. So, and then it's supposedly outperforming the other REIT's property segment. So, let's see. And they have the world's largest network of interconnected data centers. That's why I'm telling you about that one. And a yield about probably 1.7%. And so that one seems to be holding in the environment that we're currently in. QTS Realty Trust, ticker symbol QTS. This is a data center REIT, and it has data space in North America and Europe. And it's, with more of the demand for remote working with Zoom and DocuSign and all those things, you can play games with people. Have you played a game or like any of your games online with anyone yet? They're really fun. And so remote working and delivery online and cell phones. So that one might you want to look into, and their current yield is approximately around 3.4%. And so some of these real estate sectors and data could be interesting, but do be careful looking into shopping centers, malls currently, and those apartments, because if the economy can't recover, or you just really got to look at the economy. Will people go back to work? Will be able to open up? Will people be able to pay their rent? Will these businesses be able to stay in business commercially to pay their triple net leases and pay the shopping centers and shopping malls? Or will they go out of business? What's going to happen to the real estate sector? What's going to happen to people with businesses? So we're all just waiting on edge. So just please look at your Forbes, your Barron, your Yahoo Finance, your Google News, your investors, your Kiplings, your Morning Stars. Please do your research and study. And before you buy something that's dividend stock, it's no guarantee, especially in this economy. So always keep a certain amount of cash for emergencies, food, medical, before you start going into stocks. So have a great day, everyone. Thank you for your generous support. We always appreciate that. Anything from $1 to coffee to if you want to give a little more for those who can't, I really appreciate it. And everyone's saying they're loving it, and I'll keep on giving you more.